Hello, 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 everyone. Mike Arnold here, co-founder of Path Trading Partners, along with Bob Iacino. How is everyone doing today? Hope you all survived. Good afternoon, George. Ken, welcome, welcome, welcome. Hope you are well. We can peek in at Tesla. There is potential a lot more downside in Tesla, but we shall see. Got a little double bottom bounce off that 62.5, but again, you got to be real careful with everything that's a high volatility stock right now, especially mega caps again, because you get selling in the indices. You'll also take down the mega caps, and the ratios are rolling over. So that's across the board. Yeah, crazy day today. I mean, it was steady selling. Big red day down, you know, 263 basis points. Time in the S&P, 312 basis points. So yeah, it was pretty bloody. Tesla stock split 3-for-1. It's going to get interesting though long term with Tesla. Even the stock split, I don't think is going to save them at this point. That's a bigger move. Tesla says Larry Ellison will step down from board. That's even bigger move. I think things are brewing behind the scenes with stuff that's really going to come out to slam Tesla. So we shall see. That's just a little take on it. By the way, if you are new here, before I get to everybody else, please do consider subscribing, ringing that bell, and hitting the like button. Longer term viewers, please come back, like the videos, and leave some comments. All right. You'll wait to buy for quad witching day. Might as well get a deal. If not, oh well. Yeah, and quad witching is next week, so it's going to be volatile even through next week. We got a lot of volatility still in store. So keep that in only a 1% bounce at hot after hours. Best news all year for bulls. So let's see. Tesla already mentioned the stock split. Well, now it's sort of official. When will they do it? I don't have enough information on that yet. Jim Ayura supporting Bob's view. I did not believe for 1 second Secretary Yellen was surprised by inflation. That's like jumping off the high dive and being surprised you got wet. There we go, Patrick. Welcome, welcome, welcome. The ARC short is going well so far. Even made enough to walk off with her printer. Tesla stocks, so it sounds like a less pressured attempt to stop the sell-off. I agree. I don't think, yeah, you're going to split it again. You're also going to dilute the shares so much at some point. It's going to actually have it's going to get real interesting. It's going to get real interesting. Happy Friday. Hope everyone has a good weekend. Happy Friday to you too, Josh. Welcome. Hey, Mike, do you do JPM and Apple? I want it for my long term. Remind me, we can take a quick look at those. Shareholders to vote. Yes, they have to vote on the 3-for-1 split. It's not set in stone. I imagine they will approve it, but we will see. Again, I think there's more stuff in store for Tesla just from a regulatory and legal perspective that's going to come. So we'll see. We will see. Let's just go over stuff real quick. It's been a tiring week, by the way. The week that is one red week, down 475 basis points, all the way back down to the 75. By the way, this is so funny. That stopped out the daily double, and it actually, you do technically have a weekly double. Now, I would be shocked if it triggers. I'm just pointing it out. And that would have to trigger on a weekly basis. Worst case, have to trigger on a daily basis. But just for the point of, yes, that is a valid double. So you have a double actually there. You have a double in the NASDAQ. All those daily doubles are stopped. You have the double in the NASDAQ. Again, be shocked. And now you after hitting all the targets on the downside double, you don't yet have a double in the Dow. So, and we'll do the analysis this weekend. I mean, coming right down, finding support. I put up these levels this morning. Just finding support right around this major 75 harmonic and the little projection cluster from this morning. Other than that, not much to talk about. We'll do our overall analysis on Sunday. But this looks like, I mean, we're going to have a volatile week next week. Statistically, with the close below 62.5, we now favor more downside. We favor a retest of 38.56 to 38.08 by close to 70%. So do keep that in mind. That doesn't mean it has to be Monday, but this does favor a retest of this range in the S&P, in the NASDAQ, which you see completed all those double top patterns. This closed below the 62.5, bounced right off the 75% harmonic, but this favors the 11,675 area to the 11,485 retest. And the Dow with the close below the 62.5 favors a retest of 30,940 to about 30,590. So please keep that in mind for your doing your analysis next week. Russell, after coming to the first target on the double top's still technically in play for Russell, but it's now triggered this other double. The double bottom came to the stop reduction. The double top is now triggered. So now, just from that standpoint, the Russell favors lower price action going into next week also. So there's a lot of lower price action triggers now to go through. Crude pausing. It was actually a little bounce back on crude. Holding above the channel and the daily rotation zone. So we're going to have to see. I mean, crude, I was expecting to roll over a little harder with the, we're going to see some pretty decent impending inflation. I don't think we can, a recession. By the way, Michigan consumer sentiment was absolutely atrocious. This, I think, is the lowest print ever. Lowest print ever. And this is the preliminary, but this is the lowest print ever. And you see inflation expectations ticking up from previous. So that's why we also got more accelerated downside. It was not just the CPI numbers we went over this morning, but when consumers are this essentially bearish on the economy, you're going to get a recession. Consumers are going to get entrenched. You also see red across the board, pretty much, besides a little bounce in Walmart and some consumer staples. But that was very ugly. I didn't even see if this updated. I mean, it's bounced a little, but I've seen a couple now calls saying we could get the 75 basis point. I really don't. I mean, you see there bouncing up to 17%. I really don't think. I think they should. I'd be happy if they shocked the markets and went 75 basis points next week. Don't think they would. If they were going to do it, they'd say we're going to do that, and they'd start talking about it for July. Because remember, there's another rate hike in July. Then August, you have the pause, and then you have September. So I think best case now for rate hikes are 50 in July, 50 in September. Worst, the more aggressive take would be 50, 75, and then 50. So we will have to keep an eye on that. So, and also, by the way, still, I haven't updated this yet today. Hopefully it won't ask me for the login. There we go. Oh, it's not even updated. But we're definitely in very negative gamma territory. So I wanted to point something else here. Well, dollar index, again, coming up almost to the final target and closing above the 62.5. So now this also warrants a return to about 104.59, possibly to about 105, and retest this high area. This also, though, with that hitting the 75, does set up a potential. Again, you gotta look at both sides of the market, but it's a long way off from triggering. But you do have a potential double top pattern. But right now it's still on the bull case for higher. VIX up nicely, but then backing off. I was pretty surprised by that huge back off going into the close. Notes just getting slaughtered, coming back down to the next harmonic. This other double that never triggered is off the table. You still do have the other bigger double bottom that's still on. But next target is 116.11 area. Let's see here with the yields. You can see yields. There's your potential double top in the yields. But again, yields, remember, closed above that 62.5. just went through that 87.5 to 100 range, so it's already statistically hit that. On a further follow through, I'd be watching next week for it to retap the highs from back on 9th May, and then 3265 is the next target on the upside. Here's your 10-2s. Look at that. Look at that rollover. And double top officially triggered. 0.048, negative 0.12, and negative 0.012, negative 0.072, which is essentially the lows back from the beginning of April. So we're probably going to get another 10-2s yield curve inversion. Something to watch for when you're doing your homework. Before I get to that, gold. Big breakout move finally. Retest that 200 and major momentum coming in. You can see it here. Finally, some major momentum coming in. And why am I bringing up that? Because watching for a continued now higher push, especially with the market going with these inflation numbers, and now this push back up. So here's another potential play. Gold GDX, the gold miners ETF. You have a potential double bottom. So above closing basis above 33.52. You can see it right here. Let me just make sure it's anchored right. 33.52, 35.10, 35.89, and 36.88. Why? Because especially if this triggers, and I'll put this in the sector overview this weekend. If this triggers, there might be some really nice plays also with the gold miners, if you just don't want to play the ETF. So keep that in mind as well as you're doing your research this weekend. So let's see. I know I missed a lot of, let's see, JPM. No, we had this. I haven't looked at JPM in a bit. Why? JPM is in a long-term sell mode. So JPM is definitely in long-term sell. Oops. That's why I have not even been looking at it from a bullish case right now. I mean, we're filling gaps to the downside. I'm definitely expecting it to retest the low areas. The only thing now that you could have is you do have a potential weekly double bottom, but with this, you could still easily retest the 115.02 and then break to 111.41. Easily back below the 200 week. And I'm still from the long-term pattern on this. If you get below this 112.90 area, then it statistically favors the return to 88.64. So this is a critical juncture. I already bounced once, but you start breaking below that, not bullish on it for a long term. The only thing that could potentially make me bullish in the short term as a play would be this potential double bottom. That's a fair way off from triggering, especially with this week's bar. Apple, I am not bullish on at all. We're coming back down. Now we are in, you still have this setup, but again, I'd be shocked if it triggered because we still have the longer term pattern. The longer term pattern, which is this double top that already triggered, hit the first target, came back up to the breakdown zone that triggered it. I'm still expecting this to easily roll over 135 again, 120, 128, and 120.59 easily. Now we do, the only thing that could make me bullish is if we got above 150, 190 on a closing basis. And that would pretty much have to be the weekly close because it's against the weekly rotation zone. Where else do we sit? Does what correlate with the 365 and the SPY? In the SPY, let me clean up this chart. Because the SPY, yes, you do also have a potential bottom. We can look at that. But the the next minor targets down for the SPY if it goes to new lows. Well, the new statistically is 385 to about 380. We break below that, your minor levels are 375 to 371. Your next major levels, again, you got a cluster right there, and then you have 360. So those are all your levels in the SPY. And the QQQ, clean up this chart a bit. In the QQQ, again, you close below 62.5 also. So you statistically favor the return to 284.65 to about 280. Let's just see. I already have the next low order levels, 276.92, 273.62. This is just a stop down level. Your next more significant levels would be 268.76, and then major is the 62.5 from this whole run up. You see this level from the whole run up, and we know what happens if you get below that on a closing basis, and that's now you have a cluster there. So that's going to be very interesting. Where do we sit? I don't know why everyone wants to go long and trend down short and long term. We're both down now, and you know we can get some volatility, but there's again the only bullish plays got stopped at this point. Yeah, Tesla popping a little, but you know this thing that's a weak pop too. Here was that little target, that little thing against the 62.5, the little double. That did qualify against that 62.5, so did not close below the 62.5. And then you got the little pop with the split announcement. But this is getting, it's getting harder and harder to pump this stock. Harder and harder to pump this stock. So if you are long and you did buy and you kept holding, I'd keep a very tight stop on this. And I'd also wouldn't be surprised if we start getting some bad news come out. So I would be careful on the long side. Doesn't mean you can't play it, but I would not be playing it with oversized positions, because if something does come out and you get the big gap down, it could be bad. So, yes, remember, cheap can get cheaper, and things can get a hell of a lot cheaper. A hell of a lot cheaper. Good evening, Anissa. Hope you had a didn't get the notification. Well, remember, even if you don't get the notification, pretty much every day, Monday through Friday, 3:30 Central Time, I am live. Sunday afternoon, it's 3 Central Time. The fact that everything got dumped again on the final 15-minute doesn't give me a cozy feeling for the start of next week. No. And then remember again, next week, we'll go over this more on Sunday, but next week, where am I? Sorry, I'm a little tired. Next week, remember, we have a PPI on the 14th. Okay. So Tuesday we have the PPI, which can easily trigger stuff. I thought they were in the quiet period. Or Brainerd. And then remember, you have the rate hike on the 15th. You got retail sales month over month. Business inventories can actually be moving stuff. Then there it is, the interest rates and their economic projections and the press conference. And that's the real thing. I mean, we got a lot of volatility next week. Jobless claims, unless they are really big miss, not much. But then again, Friday, you got Powell speaking, and you got the CB leading indexes, which could, if that's rolling over, won't be good either for a potential recession. And then you got option expiration, you got quad witching on Friday. So next week's going to be very, very interesting. I thought 365. I just did the harmonics right now. You want the major support area. 365. Not there's some minor support about 363 right in here. But I wouldn't majors down here. Your major support area is down here because this is major resistance becoming support. So if I had to go, major support would be about 355 to 360, and we have a harmonic right there. And then below that, you're at 350 for your 50% retracement of the up move. And that's going to be the next very key level. If this heads lower, remember this was a major target area we've talked about multiple times in the S&P. So that's going to be a major target area. Yeah, the algos, the liquidity is just, again, the algos don't want to step in front of this. I wouldn't want to step in front of it either. And remember, there's more long algos than short algos. So, yeah, June expires next Friday, and this is when all the guys are rolling. You pretty much roll this week or the beginning of next week. So, can you check out GLNG? Sure. And thanks for tuning out. And I know it's late there, Christoph. Thanks for tuning in. GLNG. Huh. Well, nothing on the daily. I mean, cycles are technically at the bottom, but there's no great setup. You get a daily close. It would be super aggressive, but you get a daily close above today's high on Monday or Tuesday next week. Could be a little pop-up play because that's a %B buy. And you are at the 62.5, but you start getting that close. If you don't get that and you get the close below 62.5, I'd be watching for a return to these lows. And if you get a return to those lows, you technically have a weekly double. And it would be out of the way of the rotation zone, so the probabilities aren't lower on that. And you could see this return to the 200 week. Now, I mean, it's a long way off from triggering, but if this gets that close below that 62.5, I would not want to be looking for long plays just yet. What do I expect to happen on Monday? You'll have to ask me that on Sunday afternoon when I'm doing the stream. I have to do some more analysis, some more breadth analysis. I wouldn't be surprised to see at least Sunday night, Monday morning for at least another roll push down and then see. But I have to start looking at some breadth of market. The only thing that's giving me a little pause was that pullback on the VIX into the close. This pullback after a ramp up was very interesting, especially with the futures not closing on their lows, but staying really near the lows. So you see the big pullback in the VIX, but not any real big bounce in the S&P or in the NASDAQ. So that was only interesting. That's why I'm pausing and don't have an opinion yet. I want to look at the market breadth and some other internals to really gauge it, and I haven't had time to roll through all those yet today. Do I have a view on Arch? I mean, it's still in the uptrend, but it's weakening. I'd have to do this. I do not have any of this. I'd have to do this on now at a breakout play. Until it got the breakout play, that's the only thing that I would do to the upside. If you're not already long. because it is waning momentum. It's rolling over. You've had a series of divergences up here, but it's holding up with the rotation zone. So if this does get the breakout play, you might get the short-term pop. But it's I don't have a great setup beyond that breakout play. So, no, I don't. I mean, the last little buy was right here, back on June 2nd. And it went to retest the high area, but now it's really got a buster at high area. So, again, based off that June 2nd buy, the stop would still be below 147.25. Yeah, it does. It's a 535 EP, but it's also, you got to look at it based off this market environment. Uh, it's coal. It's a coal, and that's really a target of all this ESG stupidity and everything else. So, and this, with all the pressure even on energy, this should be ramping up even more, and it's in this big holding pattern. I again, with the way the things are politically in this country, this takes a lot to really get a pop on. You had already the big run up, and now it's topping out. I know you have decent. It looks like decent stats on it, but again, this really has to show it can break out before I jump on the trend at this point. JPM or City? We already looked at JP. Oh, what am I doing? There we go. I'm not bullish on either of them. I mean, they're both in long-term sells. You only had City. That's old. Don't bother with that. Oh. Well, do I have to choose one? I mean, City statistically should still come back down to trade 38 to 32 with this key close, rotation zone coming down. The only way I'd trade this to the long side is you get the close above 54.25. I'm not terribly bullish on banks and financials at this point. So, and comparing that to JPM. Comparing that to JPM, the only way I trade that is a close above 133.15 on a weekly basis. I'd have to, I guess, if you're talking between the two, if I had to make a choice, I'd have to go with JPM because why it didn't close below the 62.5 yet. Versus City, and I'm talking from the same lows back, the COVID lows, this did close below the 62.5. So if I had to choose one, it would be JPM, but I don't like either of them at this point. Now, they trigger a different pattern. They could be for a short-term pop, but again, that would be against the long-term trend. So that's why when something's in a long downtrend, I'd rather find things that are. That's why I was interested in I know we've asked before with stuff like GDX. That's why I'm more looking for, all right, there could be some interesting plays like in GDX, which we looked at earlier. Why? Because you got a nice bottoming pattern. Look, against this 200 week. And look at this. Look at this nice support, slightly higher support range with that 200 week. You trigger this pattern, I'm going to be looking for minors instead of trying to play banks. I like to find the easy trades, not the hard ones. By the way, the double in Microsoft is off on the daily. I know all these things look the same. But Microsoft, see why, unless if you said, would I be interested in buying Microsoft? Not now. Not now, because we have bigger pattern in play that we still favor lower prices. So like if you said Microsoft or Apple, well, they're both in longer term sell modes. So unless they trigger some kind of bullish short-term reversal pattern, don't like either of them. Do I have a fundamental view on LNG carriers? I was more bullish on them until we had all the issues with nat gas. So at least now I really don't. I mean, if it could be a good dividend yield, it could be a good from a fundamental standpoint. The problem is we're getting topping patterns. So I'd be keeping a tight stop on these if you're already long them. Why? Because you could get the bigger pullback, and then I'd rather watch for these bigger pullbacks. If these tops do trigger, then I'd rather watch for the bigger pullback area and then look to establish a position. Even with a, potential good numbers, I mean low P to E's, this would even be more attractive and even have a better dividend yield on a pullback. So if you're already long, from again, can't give specific trading advice, if these longer term sells trigger, I would either be hedging them to the downside if you don't want to sell, so put on some kind of hedges, or if you're not already long, I'd be patient in here, especially with what has happened this week with nat gas. Let me get it over here. With nat gas, and if these triggered, then watch for the bigger pullback patterns and watch for a bullish reversal pattern. Because nat gas technically confirmed but did not trigger this double, and it's still in play. Do you think? Yes, I'm definitely waiting for lower prices on tech stocks. I am completely with this price action. And look what you listed. Apple, I've already gone through a couple of times. We have a major still sell signal. We had the minor bullish pattern that's now done, over, from a fundamental, and I know this is more of a technical, but look, you're still at a 23. I expect Apple to easily hit a PE of 16 longer term. You have technical sell signals. So I am being very, very patient on these because I have longer term sells. And you have Apple also in a lot, just with the different system I use on ETFs. And I like to glance at these because the last time Apple went into a buy mode was back in April of 20. And it tipped to a sell mode a couple weeks ago, back in the middle of May. It's on a long-term sell mode. Not only that, is it triggered another long-term double top pattern. So you have multiple things saying Apple should be lower. So any bullish plays are just like swing trade scalp plays. And then if you roll in the fundamentals, this is still hefty. I know people think a great mega cap company, but this can definitely come down in this environment. Especially with the weighting of it in the indices, it can easily come down when you get index selling. And when you get stuff like Amazon, oops, missed my key. Amazon, look at this. Amazon, I talked about yesterday also. You're still trading. You got a PE of 56. The only thing in Amazon that makes money is Amazon Web Services. All right. To see a little snapback rally. We had that double bottom play, which hit all three targets. And then that rolled over. So from the COVID lows, from the March 20th lows, you just pull this off of, You're below the 62.5. So what does that favor? That easily favors 94, 92 to even possibly back to return to 80 statistically. So would I be touching this? No. I need it already played out its bullish pattern and rolled over at the 200 week. This is sit on hand. If you're only playing these to the long side, for me, it's sit on hands and wait for the continued bigger pullbacks, especially on something like Amazon. Google triggered a massive topping pattern. First, second targets hit, bounced back up to its 200, the weekly rotation zone, rotating over. So I'm easily expecting this to come back to 1949. Now, its PE is a little more attractive, but this could easily run back down to 1950. Even if we get even a lot more selling pressure in the NASDAQ and stuff, you could see this back to 1800 and reconnect with its 200 week. And look at that, the 200 week right at the 62.5. So I'll start watching once it re-enters this 50 to 62.5, which you have a target right here in. And I have to update these, by the way. And look, all right, so here's for Google. Watching for still, even though it's more attractive in the PE, this could easily drop lower in this environment. And also remember, because I hear people saying, oh, the PEs are cheap. Well, with what's going on with rate hikes, with what's going on with consumer slowdown, with what's going on across the board, if we're going into a recession, what happens to earnings? Earnings get dialed back. So price to earnings, even if the price stayed the same, P to E ratios go up if you start dialing back earnings. So that even can lead to more potential downside. And that's the fundamental stuff, but from a technical case, we could easily see a reconnect with the 200 weeks. Pay attention to these 200-week simple moving averages for long-term plays, because you're going to see a lot of these tech stocks reconnect with them. Just as you already saw Amazon reconnect with its and then roll over again below it. Look, you saw it reconnect, bounce back up to it, and roll over again. You're going to see that with a lot more. Now, I would be shocked if Google gets a fair amount of acceleration, just because it actually becomes a decent value back at that 200-week, unless their earnings completely go to crap. And Apple back at its 200-week would be very interesting, because it would have a very attractive PE then, even if their earnings are coming down. This will start converging down here. But you go into a recession, and with gas prices and food prices and everything else, you have your next upgrade cycle for Apple with the new phones and the new everything coming out. A lot of people are like, well, maybe my current phone's okay for a little while longer, because I still have to fill up my car with gas and I still have to eat. And I showed you consumer sentiment, and consumers are getting bearish, and when they start buttoning down the hatches, or battening down the hatches, that it's, well, I'm going to hold off on some of these upgrades, even tech upgrades. Yeah, it is. I think it is the highest it's ever been. And so the Fed has a lot of catching up to do still. They have tremendous catching up to do. I still think with this Fed, though, they don't want to shock the markets. But I think they're going to then say with the 50 basis point next week, I'd love if they did 75, as I said before. I don't think they will. I think then if they're going to put a 75 on the table, they'll start talking about it in the press conference. Or if they're not ever going to put that on the table, they're going to say, okay, it's going to be potential rate hikes. We just did 50. You're going to get another 50 in July. You're going to get another 50 in September. And then possibly we'll reassess down to a 25. But we're going to keep pushing it. Because they can't. You can't be having... Even if inflation were to drop at this point, let's say core inflation drops to 4%, that's still painful for people. Let's say the overall inflation, you know, let's say with the inflation figures, let's say the inflation rate comes down from 8.3 to 6%. That's not good. You know, that's still not good. And you can't have these month over months running at 1%. That is absolutely brutal. So, yeah, they're so far behind the curve, and it's getting more and more entrenched in the services. Whereas you get inflation entrenched in the services, that does not dissipate easily. Silver and gold definitely didn't follow the market today after all. Do you see silver finally get a move on for the long term potentially? I wish silver would get the pickup move. Again, it's still got to trade, keep trying to trade this around the core position. It's still weaker than gold, but you're going to see, just because of the ratio, at some point, either gold's going to have to get crushed or silver's really going to have to kick in. You see how much you see how much gold's outperforming silver. Look at the ratio again. So, you know, it's going to get interesting. Okay, I think I'm about done for today, if that's okay with everyone. You know, we'll come back on Sunday and take a look at some more stuff. I hope everyone has a fantastic weekend. Watch out for the sector overview. Make sure, if you're not already subscribed, please do consider subscribing and ringing that bell so you know when the videos do come out. And with that, again, have a fantastic evening. I'll have more information on Sunday. I'll be doing some more research this weekend to see where we stand, and hopefully we'll have a good plan for the next volatile trading week with quad witching. Again, thank you, George. You take care as well. Would you recommend the premium version for the Trading View just for the indicators to recognize the resistance and support level, support better as a beginner? The reason I like more of the premium versions is because I can get more indicators on the chart. It gets a little too limited. So you have to assess. I mean, if you're trying to follow along with the stuff we teach, you might want to pay up to be able to get more indicators on the chart, because you can recreate some of your charts like ours. By the way, if you want to, I do have the link in the description below for these videos. So if you do want to help support the channel, sign up via that link, because, you know, it gives us a little credit towards our own Trading View subscription, which I pay for. The only reason I pay for this Trading View subscription is so people can follow along with me. Because if you didn't have the same trading platform, and I don't want to show my live trading platforms, you know, with everything going on with that, you know, forget to hide my account number. That could be bad for people going in the, for not saying anybody who currently subscribes would do anything with that, but, you know, there's some nefarious people out there. So the reason I subscribe to TradingView is so we can all follow along, and you can use a platform to mimic exactly what I do without me having to try to teach to 6 or 7 different platforms. And I know everything I teach, like the harmonics, which you can customize on TradingView by just adjusting your settings. You can just follow along with this. So anybody, yes, I do recommend signing up for one of the more premium versions of TradingView, just so you can get things like the rotation zones, so you can get the key moving averages I use, and you can get some of these harmonic levels on the chart and learn to. The whole point of this channel is to help people learn to set up your own charts if you don't already have a way to do it, and to mimic some of the stuff I do, and if it works for you, incorporate it into your own trading, potentially. You can, I do use volume profile. I don't teach a lot of it on here. I'm trying to keep it simpler for people, but for my futures trading, I do use areas with volume profile to help fine tune the stuff. I can't throw up everything I do here. I'd have 2-hour videos every day. purpose of channel, it's working. Well, I'm glad it's working. You know, also, I've been doing this for 30 years at this point, so there's a lot of things I do that I just can't get into on this channel. But I teach enough stuff that, hey, until you master all this stuff, you don't need any more, because this gives you enough tools to get ahead. All right, and I occasionally roll out more things, especially for longer term subscribers. You see more things occasionally pop up that I start talking about once people get to really master some of these current tools. All right, you are very welcome, Hildy. I hope I said that. Please give me the phonetic spelling for that. I don't want to say your name wrong. You are welcome, Patrick. Everybody else, Swaghetti, thank you. You have a great day and a great weekend also with that. Again, I will talk to everybody who wants to join me Sunday afternoon to help prep for next week. Everybody, fantastic weekend. Bye for now.